This week, we have a Hedera Governing Council member that's taking steps to reshape financial markets in the world. We also had a massive increase in HUSDC liquidity that's minted on Hedera. We have an update on the HBAR ETF. Of course, the crypto and HBAR markets are absolutely taking off, and we have a great Shark Bites where Rob Allen takes your questions and much more. Welcome back. I'm Brandon, the HBAR Bull, here once again to bring you the latest in the Hedera ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So the first thing I'm going to jump into is the Nairobi Stock Exchange is doing what we've hoped they were going to do for a while. They've announced that they are launching a digital version of their stock exchange. Of course, this is massive news, and even though this was announced on Monday, it's been quiet all week. So to explain it further, DeFi Technologies, SoFi, and Valor, that's the issuer of the Frankfurt HBAR ETF, have partnered with the Nairobi Securities Exchange to design and launch the Kenya Digital Exchange, KDX. This is a fully regulated platform for tokenizing real-world assets aimed at enhancing Kenya's financial market infrastructure. KDX will offer a diverse revenue model including trading fees, listing fees, and staking services. The platform will be deployed in 3 phases, with full implementation expected by Q2 2026. So we should start to see some steps taken pretty soon. Now, this is going to position Kenya as a leader in digital asset trading and tokenization across all of Africa, and I would say the entire world. The co-founder of DeFi Tech said, "This partnership represents a transformative step in expanding digital asset infrastructure across Africa. By collaborating with NSE, we will empower investors with new asset classes, driving economic growth and positioning Kenya as a leading financial hub in Africa." The CEO of the Nairobi Securities Exchange said, "This partnership marks a bold and strategic leap forward for the future of African capital markets. By collaborating with DeFi Technologies and SoFi to design and launch KDX, we're laying the foundation for a dynamic digital marketplace that will unlock new investment opportunities, deepen market access, and position Kenya as a trailblazer in the tokenization and trading of real-world assets across the continent." Now, I talked about this last week on All In Crypto and again on the Paul Barron Network, but this is one of the things that I was expecting to see. Initially we had things like NFT marketplaces, and then that moved over into DeFi where we had fungible tokens. And my question was, is that going to translate over to what we all want? And that's for DLT technology to make traditional markets more efficient and just generally better and more trusted. In the case of Hedera, we saw that first step into the traditional markets with Digital Commodities Exchange and then Verra. Now, those are small commodities markets, but they are absolutely traditional finance. But it's a big step from those kind of markets, which are measured in the millions of dollars, into even a smaller stock market like the Nairobi Securities Exchange, which is $15 billion. So that was a big step that we needed to see. And I haven't seen that happen with any other networks, but here we have the Nairobi Securities Exchange going to launch tokenized marketplaces on Hedera. The impact of this could not be overstated because, of course, just like the NFT marketplaces and the DeFi marketplaces act as a proof of concept for somebody like the Nairobi Securities Exchange, Nairobi Securities Exchange is going to act as a proof of concept for the bigger markets out there, the FTSE, the Texas Stock Exchange, the New York Stock Exchange, Nikkei, and the list goes on. So this is going to be really fun to watch how all this rolls out. And a year from now, it's supposed to be fully implemented. So it's going to be a wild ride over the next year. And I wish the Nairobi Securities Exchange the best of luck. But we are seeing a lot of other things that are happening in the Hedera space and metrics that we can pay attention to that are showing that we are moving in the right direction. Zep highlighted something we've been discussing in recent weeks, and that's the significant increase we've seen in Hedera account creation. We also saw a really nice increase in the native USDC that was minted on Hedera. We actually had 2 spikes. There was one from about 84 million into the 90s, and then we saw a second one where we jumped up to $114 million in USDC minted on the Hedera network. So it's great to see this. Now, we don't know exactly where this is coming from, but I'm going to have some more discussions. Hopefully, we're going to have a DeFi corner tomorrow with Brady from Bonzo Finance, and I'm sure we're going to dive a little bit deeper into this metric. So finally, we had Linkpool highlight that their endpoints are seeing significant traction. At its peak, they saw 14,000 requests per second and a total of 225 million requests up until this point. To explain link pools, they allow Hedera developers to leverage existing Ethereum-based tools to build into their apps. Hedera builders use Linkpool as a JSON RPC provider to facilitate seamless interaction between Ethereum-compatible decentralized applications and the Hedera network. This increase in Linkpool requests indicates growing adoption of Hedera's EVM-compatible features. Shifting gears a bit, we had a new listing of HBAR on Hedera Governing Council member BitGo. And unfortunately, we got some news on the HBAR ETF as well. It's not really bad news, but the SEC did delay the decision on the HBAR ETF until June. Really, this isn't bad news at all. We weren't expecting them to make a decision at this point. We would have been really surprised if they had, so we'll be looking forward to June. So we did postpone the interview with Equity Lab, but that is 100% coming next week, so you don't have to worry about that. But I did have another AI interview with Michael Kantor. He is the president of Hashgraph Online. They're doing a lot of good things in the space, but one of the things they're doing is setting standards around the crossroads between AI and Hedera. And last week I was mentioning that HBAR would be a perfect native currency for AI. The way they're setting these standards up, it's really setting the table for that to be the case. Not just for Hedera, but I think it could be the standard across the board. I know that's pie in the sky at this point, but with teams like Hashgraph Online working on this, I think it has a real possibility. So let's take a look. Michael, welcome back. I know that you've been really busy lately, so we appreciate you making some time for us.
Thanks, Brandon. Always appreciate you inviting me to the show. It's been crazy busy here, very long days. We're really excited about the work that we've been putting together in the ecosystem lately.
Well, we certainly appreciate it as well. To start off, can you just tell us how Hedera is doing in general in the AI space?
I think in general, for the first time, I mean, we had a lot of commotion around this NVIDIA thing, right? Intel and this partnership, and that was really exciting. I know for most folks, though, when they saw that, maybe it felt like an enterprise initiative. It didn't feel like close to retail as much as some of the other initiatives that we've seen when you think about what Web3 and AI looks like. And I think for the first time, we're actually starting to see, at least from a retail perspective, people will say the word Hedera and AI in the same sentence. And that's one of our goals, actually, with the hackathon and what we've been working on around these open source standards, is that there is actually an association of those two words. It sounds like so simple, like as far as goals go, you have really big, beefy KPIs around numbers and revenue and things like that. But when it comes to crypto, one of the things that we always have to keep in mind is this attention economy, right? And just simplifying. And the most simplest thing, like Hedera X AI, like just putting that in people's heads and seeding that idea in their heads is really important. And it's also really important how you execute it. And I think we're starting to trend in that direction. And we're starting to realize, from the bigger picture perspective, why the word AI actually makes sense with the word Web3. You think about in a lot of ecosystems and how it can potentially be kind of a clunky process. Like the idea of even putting an AI onto a network, like how do you verify its data? How expensive is that? You can't realistically do that on Bitcoin. But you think about Hedera and you're like, wait, we actually could. We have the Hedera consensus service. This is actually possible, and it's not going to cost you a fortune. It's actually possible to monetize these agents in an implicit way just because of how Hedera is set up with its native transaction services like scheduled transactions and shared batch transactions and allowances. It makes it really easy to build out agentic infrastructure.
Well, I think the next thing we're going to get into is along those same lines, how we actually do the value transfer when we're dealing with AI. So from what I understand, you're one of the people that's really involved with this new Convai, and I hope I'm pronouncing that right because you said it a little bit differently earlier. So correct me if I'm wrong on how I'm pronouncing it, but can you just run us through its importance and how you see it being used?
Yeah, so you can say it whichever way. The way that we've envisioned it, and it doesn't have to be the way that you take it away, is that you would say open convey. But you can also say convai. That's perfectly fine, I think, when it comes to it. And in general, around what open convey is and what we envision it opening up, if you just walk backwards a little bit and you think about the problem statement, I have an AI agent and you have an AI agent, Brandon. How are they going to talk to each other? How are they going to find each other? How are they going to discover and send communications? Like that's the core problem that we were trying to solve when we came up with the Open Convey standard. And we were thinking about, it's like, wait, the Hedera consensus service makes a lot of sense for this. So through the Open Convey standard at its core, what it unlocks is the ability for two AIs to find each other and start talking. Anything after that is just a bonus because you're already unlocking a huge problem. When you think about, for example, agents that are running on Eliza, and Eliza is an amazing framework, but you might have an AI agent like XBT running. He might be talking to another AI agent, maybe the Hashgraph Online AI agent. And they might realize, well, this conversation's a little bit weird. And they might not realize they're actually talking to an AI agent in that context because it's on Twitter or Discord or another medium. And then what's even more interesting too is like you might message this AI, you might ask them to transact, and you wouldn't really be able to do that. It'd be quite clunky. Like what rails would you use? Which network would you use? How do you figure out which wallet these agents have to actually facilitate any sort of commerce? So at its core, that's what Open Convey unlocks, is that AI to AI communication. But what's also interesting is while it enables AIs to talk to each other, it also enables humans to talk to AIs, enables AIs to talk to devices, like those on the Neuron network. And that gets really interesting because now you've got this ecosystem that's powered through Open Convey and the Hedera consensus service, where an AI implicitly, let's say, for example, Brandon, you've got an AI for Twigital that's really good at taking a picture that you feed it and tokenizing it and putting it on chain as a 3D AR model. And the interface to that could be Open Convey. You can discover this Twigital agent through the Open Convey portal. And now you can, on your side, Brandon, you can monetize it. So let's say I decide, well, I want to go and take this monkey picture that I have and put it as a 3D asset through Twigital. Your agent would have its own conversation topic that it's spun up because you requested to talk to it. And implicitly, without even asking or exchanging any terms or anything like that, every time somebody writes on that conversation topic, they are charged HBAR because that's how you set it up. And that's how the network is set up through HIP 991 implicitly. When I requested to talk to your Twigital AI agent, your Twigital AI agent decided immediately, when I spin up my channel for people to talk to me, I'm going to charge 10 HBAR for every request, like a flat fee. And now in a single transaction, every time I send a message, create this monkey picture for me and put it on Twigital's 3D asset. Boom. Immediately when that message goes out, your AI agent earns that 10 HBAR. And then it starts processing that request and it sends it back in that communication channel. Here's your asset. Now go off and do what you want to do with it. Those are the kinds of things that Open Convey unlocks as a whole. Like every person who's building with these tools, they can now monetize their knowledge bases and their tools and things like that. What I kind of foresee happening initially is folks will start running local large language models like Olama, right? And they'll start monetizing things like image generation, text generation, et cetera, like the basics. And as the ecosystem grows, folks will create more and more advanced use cases like Twigital, or maybe what gets even more interesting, let's imagine there's a Bonzo AI agent. You can interact with it. What if you can interact with that Bonzo AI agent and start lending and borrowing through a ChatGPT like interface, right? So now it becomes another avenue for these protocols to generate money. It becomes a utility for projects that can build on top of the protocol and create some really cool stuff. I know I went on a little bit of a...
No, absolutely amazing. And actually, this is something that I brought up in my last show that, I think naturally we go to stablecoins as using it as the medium of exchange when we're talking about transversing value online. But I think that using HBAR is even better just because of the way our fee structure is set up, right? So it's 1/10 of a cent to send USDC, but it's 1/100th of a cent to do HBAR. You're talking about, possibly charging 10 HBAR, but with that kind of a fee, you could go all the way down to 1/10 of a cent and still have plenty of room to actually generate revenue for whatever you're doing. So I think this has a tremendous amount of potential, not just for the Hedera network, but also for the AI space in general.
It does, exactly. And, we say this a lot, like in the hackathon roundtables that we've been hosting for the hackathon. AIs, unlike humans, they don't share that maxi mentality that we have towards certain cryptos. For an AI, the most important thing is here's an input for a task, and let me go and figure out how I can best execute that. And that might be through Hedera's underlying services because it's the cheapest and fastest way to actually execute commerce through this open convey standard.
Understood. That's amazing. So one of the things that Hashgraph Online is doing right now is a hackathon, and that's why I contacted you, because I saw that you commented on the hackathon. I know that you're, I think, the CEO behind Hashgraph Online. Is that right?
So Hashgraph Online does not have a CEO.
Okay.
We are a Hashgraph Online.
Is a DAO?
It's a DAO consortium.
Okay.
So I am the president of Hashgraph Online. Patricia from Syntax is our vice president, and every member of the DAO is very much involved. So the premise of the DAO really is like, for example, with the Open Convey standard, someone in the DAO or outside the DAO will create and propose a standard like HCS10, right?
Mm-hmm.
And then we would go through this governance process utilizing governance tokens where the DAO will actually decide, okay, the standard is ready to be published. So it's, if you want to compare it to something, I guess the closest thing would be like the Hedera LLC and their governance today. So it is modeled a little bit after that. But that's the idea. We have these member orgs. Today we have 10 members, and those member orgs help contribute to governance of these standards that we put out. So they're not created in a vacuum at all. It's very much a community and DAO-led effort for everything that we do.
Understood. But right now you have this hackathon going on that is focused just on AI. What are some of your expectations and hopes for what we might see come out of that hackathon on demo day? I think that's going to be on May 20th next month.
Yeah. It's a lot to unpack there. Number one, with the hackathon, yes, there are $30,000 in prizes between 3 tracks. And the first track is actually the best use of the Open Convey AI standard that we are talking about. And there's $10,000 that you can win there. But there are also 2 other tracks that you can submit to, which is the best use of Hedera's Eliza OS plugin. Recently, there was a stream that Jake did with Shaw, who is the founder of Eliza. That's a really good piece of content to go and follow if you're looking to build on top of the Hedera Eliza OS plugin. And then the third track is the best use of the Hedera Agent Kit or MCP servers. So you've got a lot of different tools that you can build on to submit and win from that $30,000 prize pool. But more importantly, as you mentioned, like money is nice to win with these hackathons, and it could be a seed to start a company. But more importantly, when you enter a hackathon, you're potentially building a business with some of the people that you meet from this hackathon. It's a really good way to start companies. By participating in hackathons, you'll meet potential co-founders going through this process. And maybe you already have a team, and maybe this is a good place to vet out, like, are we actually going to be able to execute as a team together? So a hackathon is a really good battleground to like get these things solid and potentially meet your business partners for your Web3 startup. So I encourage you, not just from like the financial perspective to participate, but also from the upside of being able to build out that team and test out your products. But even the most important part of the hackathon, I think personally, coming from the perspective of the founder, is the demo day. Because the demo day will be on May 20th, and it's going to be this large event where you get to pitch in front of a panel of investors, judges, and mentors that are on Hashgraph Online, and even outside the ecosystem. It's an event that we're going to be promoting massively and putting a lot of time and effort into making a success. And as a founder, it's a really massive opportunity where you get that exposure. If you've ever watched like Shark Tank as a lower version, or if you've ever watched the YC demo days, a lot of startups who participate in demo days, and I'm not saying that this will happen, but I do hope it does, they end up going on and getting additional opportunities, additional funding, sponsorships, things like that. So there's a lot of upside to participating in any event that has a demo day of sorts, because you never know what kind of opportunities it might open down the line. So again, that's going to be on May 20th. It will be a YC styled demo day where essentially you as a startup who's built something in the hackathon will be able to present your solution to this panel of judges. You'll be given, I think it won't be a huge amount of time if you've watched these YC style pitch demo days. So you have to be really quick, concise, and really good at it. And then you'll get feedback from the panels and judges on your solution, which is also a huge opportunity, by the way. And then after the demo day concludes, we'll actually be reviewing all of the pitches, and the ones that did the best, ultimately that will factor into your hackathon scoreboard. So 15% of your score is actually based on how well you do during that pitch day. And the startups that are invited to demo day would be picked from the top startups that had submissions.
Oh, this is going to be fun to Yeah, it makes perfect sense. It's going to be fun to watch. Is there anything else that's happening in Hedera AI that you want to highlight?
There's actually, I think by the time this video goes out, there's going to be a big announcement around the Moonscape Open Convey portal. And what that is essentially is, I was kind of hinting at it earlier in the call, but having this like ChatGPT like interface where you as a human can talk to AI agents. So it'll be a central portal where you can find agents, talk to them, and connect to them in real time. So again, like as a startup, if your agent is registered through the Open Convey protocol, then humans will be able to talk to that agent. You potentially be able to monetize it utilizing HIP 991 as that mechanism. So that'll be launching later today, actually, in testnet. And we'll be receiving feedback from the community and iterating and building a few more things around that before we go and move it into mainnet. But it's a really good time to, in combination with the hackathon, spin up your AI agent, see how it works, and then how it fits into the wider Open Convey ecosystem. This week, there's also a lot of events. Tomorrow, there's going to be 2 events that are pretty cool to look out for, depending on when this video comes out. There's going to be a workshop with Hashgraph around the hackathon. It's going to be the second workshop. If you went to the first one, that was very cool. And there's going to be the Hackathon Roundtable at 3 p.m. Eastern. And the Hackathon Roundtable is a place to learn more about the hackathon, but we have these mock pitch competitions at all of the roundtables. So it's a good way to get practice and win prizes. So on Tuesday, you'll have the opportunity to win a Bonzo NFT from the pitch contest. And on Thursday, we have another Hackathon Roundtable where you'll be able to win $200 in pack tokens. So the way that the competitions work generally is you give a 30-second pitch about what you want to build or anything around AI agents. And our panel of judges will review and give you feedback. And afterwards, the best pitch will win the prize.
Oh, exciting stuff. Michael, it's always a pleasure to have you on. Thank you for all the hard work that you're putting into the Hedera AI space, and we hope to have you back real soon.
Absolutely. Thanks so much, Brandon.
I absolutely love the idea of the HBAR becoming that native cryptocurrency of the AI space, and it really has all the features to be perfect in that role. I was just spitballing about it last week, but with what Michael just said and the standards that they're rolling out, I think it has some real potential to actually come to fruition. The next thing I want to touch on is we were just talking about how they're having that hackathon and giving out incentives for developers that are building in the AI space. Well, that's also happening in the refi space right now. DLT Earth has a $200,000 bounty program that just launched. This program is a collaboration with Verra and Gold Standard. They are the two largest carbon registries in the world. A carbon credit methodology is a process or standard used to quantify and verify the reduction or removal of carbon. So we've been talking about how Hedera is leading in this refi space for a long time. We've done some great interviews around this. Genfinity actually just came out with an announcement that they are going to be doing an interview with Deloitte talking about this exact thing. I think that Hedera has a lead that is almost insurmountable at this point. And actually, Rob Allen, our great friend from Down Under, who always does the Shark Bites with us, it's one of his favorite use cases, besides payments, of course, because he is a payments guy. But Rob came on again this week to answer your questions in Shark Bites, so let's check it out. Rob, it's been an exciting week, and we just got an announcement from Circle that I'm sure you're going to jump off into in a little bit here. But yeah, really exciting stuff going on, both in the Hedera space and elsewhere in the crypto space.
Yeah, there's plenty going on as usual. So many announcements, kind of very difficult to keep up with it. So yeah, literally digesting all the news every day and trying to assimilate the news and fit it into my job and my world and the advisory that I provide to that network of businesses that I work with on a day-to-day basis. It certainly keeps things interesting.
There's no question about that. We certainly live in interesting times. So the first question comes from BL23, who asks, any news on the Australian digital dollar and Australian Payments Plus? Now, Rob, I know you talked about Australian Payments Plus and gave us an update a few weeks ago. I don't know if you have any additional updates, but I was curious if you had any updates around the stablecoin that's coming out of Australia, the Australian digital dollar.
Yeah, the AP Plus update was that there is no update that we can announce yet, and that still remains the case. But I'm hopeful that fairly soon we can talk at length about what we've been doing. AUDD is I need to check in with them, but we've got a range of use cases lined up to use Australian dollar-backed stablecoins, and AUDD are great friends of the fintech ecosystem here in Australia and AP Plus in particular. So yeah, there's a range of things that we're seeking to do. We've got a couple of engineers playing with their APIs right now. So it's once everything's announced, it'll become a lot clearer.
All right, well, we'll shelve those for right now. We have one from Lewis who says, based off of what Charles says below, what's Rob's outlook on it for the whole industry and for Hedera? So, Rob, just to give our viewers some context here, I'm going to play that video real quick and then we'll come back to it.
There's two bills that are currently being discussed in the House and Senate. The one that's most likely to pass in the next 60 to 90 days is the stablecoin bill. And then the second one's the market structure bill. Once those two bills pass, Apple, Microsoft, Google, Facebook are going to say, hey, we're crypto people now. And so they're going to put wallets in their platforms because they can capture an enormous amount of the market. When you add their user bases of 3 billion people, and when they have those 3 billion users, it's like they have cryptocurrency wallets right in Windows, right in Facebook, right in your cell phone apps, right in iOS. And because they now can legally hold stablecoins and use stablecoins, they're going to do it because they don't like paying the processing fees on credit cards. So they'll issue their own stablecoins or partner with people to do that, and they have feeless transactions inside the system. And then suddenly these tech companies become financial service providers, and they have so much money and so much power that they'll push through. Once that's there and you have a good regulatory regime, it's very easy then to click a button to create yield products on top of that. So that's what's going to bring the value flow in, because the users already are wired into that system. Their money's already there. Their credit cards are already there. Their purchase power is already there. And there's just too much temptation not to do that. And the competitive equilibria are such that they have to do that. Once these two bills pass, that opens the floodgates, and that's 3 billion people that enter in.
So, Rob, some really interesting stuff coming from Charles Hoskinson, of course, from Cardano fame, and he's getting a little bit closer now to Hedera, having some conversations with Lehman and so forth. But Lewis did have some additional information. He goes on to say, if the best tech doesn't always win, what has Hedera done to stop these carnivores from creating a paradigm shift, baking the pie, and eating it too, all on their own? So it does sound like what Charles is saying is possible. It's certainly, once we get that regulatory clarity, some of these big tech giants might come into the space in a big way. What are your thoughts on it?
Yeah, for sure. Charles, as ever, is a deep thinker in the Web3 space. He's a purist and very principled in his, Web3 decentralization and libertarian views. So, it's not someone that you should ignore. And I tend to agree with him, right? There have been barriers to entry for big tech and big enterprise into the Web3 space, and largely due to the lack of regulatory clarity, and that's been the case for years. And obviously, the SEC approach under the old administration just made those barriers higher. I see it on a day-to-day basis. The lack of regulatory clarity means that the risk is too high for most enterprises and corporates to even go anywhere close to this space. And where there are jurisdictions that that appear to be more progressive and take a front foot approach to the adoption of Web3 technologies, you get innovation, but you don't get scale. So the combination of the scale that the big tech giants, not just in the US, there are obviously large enterprises that under other jurisdictions that are maybe more progressive or taking a different approach, but they're all kind of converging in the same space now. And that is with regulatory clarity and the maturity of the technology, most importantly, because, the two things need to go hand in hand, leads us to a massive explosion, I suspect, a Cambrian explosion of new utility, new innovation, and new products in market. And what Charles is saying is that all of those big tech companies that have consumers already, 3 billion he mentioned, I suspect it's, probably double that. They need to maintain those relationships over time, because for some, this kind of switch to Web3 or the transition to Web3 will be existential. So they need to manage that risk, but also they need to get an edge on their competition. There's a constant kind of battle for customer acquisition and customer retention, and also the new products that can be brought up, that can be enabled by these technologies, need to be tested and rapidly iterated on and sort of pushed into the market. So the starter gun really is, and as Charles says, from the US and the tech giants that are based out of the US or regulated by the US. They've been waiting for the stablecoin bill, the Genius bill, and the market bills as well. So that's happened, right? That's happening right now. It's happening. And there is no doubt in my mind that all of these businesses that Charles mentioned will have strategies that drive forward into this space. As we always say, it's almost cliche, but we are still early. We're kind of at the end of the beginning now, to quote Churchill. And the next phase is one of I suspect, rapid expansion, rapid improvement and advance. So we need to be ready. A good example of that is, as you mentioned at the top of the show, the Circle. So Circle have literally yesterday announced the Circle Payments Network, CPN. This isn't something that would have happened overnight. This is something that Circle will have been working on for a year or more. In fact, 4 or 5 years ago, I was part of a project that looked at Center, and Center was a collaboration between Circle and Coinbase, where they sought to do much the same thing as what the Circle Payments Network is now seeking to do. Circle and Coinbase weren't able to progress that for a number of reasons, largely legal, but now Circle seems to have refined and improved on that model. and are now driving it into market. And I think that's a massive signal that that things are now about to get very, very interesting in the payment space. For Circle and the Circle Payments Network, they've got the USDC and the Euro C, so that gives us a great place to start. It's the second biggest and arguably the most regulated stablecoin on the planet. So they're leveraging that position, as you would expect them to target initially cross-border payments, so massive corridors of value transfer that they're seeking to enable. That probably goes toe-to-toe with the likes of RippleNet and some of the other cross-border solutions that we've seen. I don't doubt that they'll be successful in this. There are other models. There's a white paper came out a few weeks ago called UBIX. UBIX is a far more decentralized model that's seeking to do something similar based on a new blockchain rather than a cross interoperable chain solution like Circle's, but still centralized. So, Circle obviously has the control of USDC and mints and burns across the different chains. So it's very much a centralized solution, but with its kind of cross-chain tendrils, if you like, that go out. And then there are other models, there's models that we're looking at, which are far more scheme-based, that have participating stablecoin issuers that collaborate in a different way. So the different models emerging, all of which will compete, I suspect, and but USDC and Circle are very well placed for doing that. Obviously, we issue onto or Circle issues USDC onto Hedera. We've got increase in liquidity now that we're seeing. We're not currently integrated with CCTP, their cross-chain interoperability solution, which I suspect and hope will be something which we now focus on as a Hedera ecosystem to correct. But once that happens, all the use cases that sit on top of that, and they Circle talk about things like settlement coordination, and so the use cases such as cross-border, which need that kind of settlement coordination between the ends. It makes it real. The use cases then become things that can be productized rather than the network that supports them. So all of these things are super interesting, and as you know, I often say the underlying properties of each of the networks, the DLTs, actually then support different use cases. So very keen to see Hedera integrated into CCTP so that the cross-border can actually get to the final mile. We can actually enable things like micropayments, transactional Internet of Things, all things that we talk about a lot that Hedera is uniquely placed for, will be force multiplied by some of these different ways of doing payments and cross-border payments transfer. So yeah, super, super interesting times, and I think we're just accelerating now. And as a payments guy, I'm kind of elated that we've now got through the mire, and we can really focus on changing the way that the world operates and transfers value.
Rob, with this new Circle network, where these stablecoins generally have been used for speculation in the cryptocurrency space, somewhat used for remittances and store of value in some like third world nations and things like that. But do you think with something like this network that's coming out from Circle, it's going to facilitate a lot more uses, and Hedera's version of USDC will compete really well in that kind of a market?
Yeah, absolutely. We pride ourselves in being differentiated from the other chains. We also I believe over time that if these networks will become transparent. The uses of them, the utility that's built on top, won't expose the fact that it's using a Hedera or an Ethereum or another. It'll just be, right? And we will over time become less obsessed on what chain is being delivered and what the use cases can do for us and do for our businesses, and really enable those things. But the fact that Hedera is so differentiated from the others, I think, kind of sets it up perfectly to be a chain of choice, a ledger of choice for these use cases. Yeah, and going back to what Charles was saying, I don't think it's a done deal that the Googles or the Facebooks or the big tech giants are going to win in this space. I mean, there are challenges to big tech and big corporates kind of pivoting and changing direction or bringing on new products. So there are opportunities for more agile, more nimble, smaller organizations to scale quickly and address that. Of course, the big tech companies have billions and billions of customers, but that didn't help Facebook, right? When Facebook tried to bring Libra to market years ago, they hit these regulatory barriers, and they'll try again, of course, and Meta will bring something to market. And now I think that they've learned the lessons of how they failed under the previous administration, and will compete toe to toe with the rest of them. But the US is only one market, and USDC and USD-backed stablecoins, while, as we now believe, reinforcing the fact that the US dollar is the global reserve currency of the world. The flip side of that, as I understand it, is that other currencies using similar technology will actually have a more level playing field now to start competing as well. So I think it'll be an interesting time over the next few years to see how that plays out. And of course, we have big companies that operate in different currencies. So governing council member Magalu has far greater presence in South America than Amazon does. Right? It's the Amazon of the Amazon, and it's and it doesn't necessarily use US dollar denomination for any of its transactions. So, I mean, just as an example, there are lots of huge businesses around the planet that don't need US dollar, and Circle doesn't currently support. So that there'll be, such as the Philippines, and we've got the FSCO announcement recently about rolling out stablecoins in the Philippines on Hedera. So there's plenty to play for still, but the big tech giants out of the US are definitely going to make a big play for it.
Well, what I took from that, you mentioned Libra. It became clear that the U.S. government did not like the idea of tech not only ruling, the internet, but also moving into the payment space. Not that they can't facilitate some things along those lines, but they can't just take it over and create their own currency and everything else. That seemed like it was a done deal. They weren't going to allow that to happen. But what I took from what Charles was saying is they're going to build infrastructure into their platforms to allow things like Hedera and Cardano and all of these other networks to then leverage and take it to the next level. I mean, we saw with MasterCard Provenance that running your own blockchain or your distributed ledger isn't easy. And just because you move into that space doesn't mean you're going to be successful, even if you're a huge corporation. So I just see this as a facilitator for everything that Hedera is already doing, having wallets built into iOS or into, the Google stuff or whatever it might be. I see this as a good thing. And I think that's how Charles was framing it, as this is going to be a good thing for the rest of the cryptocurrency space, not as a negative, which it kind of seemed like Lewis was implying.
Yeah. No, I agree with what Charles is saying. These Google obviously has a pay app. Apple has a pay app. In Web 2 space, we call those wallets, of course. In the Web 3 space, we have a very different concept of wallets. It's a keychain. It's the ability to sign transactions. That's the integration that we need, right? So there are good examples emerging of traditional payments wallets that integrate crypto keychains. Actually, you can store identity credentials on them as well. So you actually have this kind of orthogonal approach to bringing together a payments wallet, an identity wallet, and a crypto wallet. That's the super app of the future. That's the thing which enables 1,000 new use cases to flourish around it, because it's inherently decentralized. It's self-sovereign. It provides me the control to me. Obviously, there'll be a number of steps that we need to go through. The regulatory treatment of those apps in different jurisdictions is variable, and therefore that's going to limit the rollout of some of these products. But that's okay. We can token gate, we can kind of geo gate the utility in those apps. And I'm working on a number of projects and advising a few others that are specifically looking at things like that. So yeah, we're I think we're ready. We're really ready to really see a massive explosion of new utility.
Completely agreed. All right, so the next one comes from Ray, who asks, with renewed emphasis on verifiable images due to ChatGPT's new 4.0 image generation, allowing effortless fake screenshots and photographs, is Equity Labs' Sterling project still forging ahead, or is another project working on this? Recently, Mark Andreessen on the Joe Rogan podcast mentioned that blockchains could help solve this issue. As an aside, I think in-depth information needs to be included in the image file. Otherwise, you could take a real photo of a fake photo and get away with it. So, Rob, of course, Equity Lab has been in the news in the Hedera space a lot lately because of the things that they're doing with Intel and NVIDIA in the AI space. But originally, they started off working in the Hedera space with this making sure that photos were verified, even with hardware in the cameras. And that was called the Sterling Labs project. Do you have any information on this one? I haven't followed up on it in a while.
I don't. I mean, have you got Jonathan on the show? Have you got an interview with?
I haven't gotten Jonathan, but I am supposed to get Andrew here on from Equity Lab here before too long. So I certainly can ask him, but I haven't had him on quite yet. Yeah,
definitely ask the guys from Equity, because they've evolved Equity Labs out of the Starling Starling Labs project. And actually, Starling Labs was one of the earliest public use cases within the Hedera ecosystem we celebrated. It was an amazing use case, and it remains so. The idea being that war photographers or journalists on the front line, or any kind of photojournalism, could have the imagery that they were taking, date time stamped, location stamped, and then put that onto the public ledger so that it could be independently verified at any point in time. And it, for me, that still remains a very resonant use case for many users. I don't know how that progressed. Certainly a great question to ask when the Equity Labs guys come on. The use of AI, the convergence of those two use cases is an excellent approach, I think, to utilizing what we're now seeing AI being used for, and the provenance of data, the provenance of the capturing and the deep fakery, which is so easy to do now. I mean, we see it all the time on our streams. It's very, very difficult to differentiate between real and fake, and that we're just starting, right? So it'll only get worse or better depending on your perspective. So yes, I think that should definitely be a focus. Maybe not a focus for Equity Labs, but maybe it is. Maybe that's exactly where they're thinking about taking this. Obviously, the firmware inclusion in the NVIDIA and Intel chips that Equity Labs are working on will, I suspect, be general purpose. So the use case that sits on top of that, such as this one, and the provenance of imagery or video, would be a kind of follow on, and maybe just one of dozens of use cases that it could be used for. But I think from what the question was saying, it's a very good application of that technology and the way that it has evolved and is evolving. And I agree, it does need to be deep, right? The one would expect there to be many layers of information, as there are with things like PDFs. So people don't realize that when under the data structure within a PDF file isn't just the text you're looking at. Actually, there's quite a deep set of layers behind that, which adds to its provenance. Same would apply for images, I suspect. AI and Hedera are a great match to enable us to to protect against any fraudulent use of one's image or any other image.
Well, I'll try to get some more information when I talk to Andrew here in a few days. They're certainly working on some interesting things. So we do have one more from Lewis, who asks, can you give us the lead time it took for specific governing council members to announce their council affiliation from the time the council voted for them to join? How long did they go dark before announcing to help calm nerves due to the lack of governing council member announcements this year? So Rob, I know it seems amazing that people are so focused on this. Again, I think we've gotten to critical mass with the governing council, so I'm not overly worried about this, but obviously the community certainly is. And I actually am pretty surprised that we haven't had a governing council member announcement yet. But what are your thoughts on this one?
Yeah, we're all frustrated, I guess, or interested in the timing of announcements. I know that there are some coming. There are changes that have been made around the kind of process for announcements. It was always the case that the announcement had to be made by the new council member. So the timing is on them. And that's mainly because they have to go through their internal media and comms policies and announcements and press release. We've now included certain obligations on the new member to set up their node and to do a variety of other things so that they can really that they've really got skin in the game before the announcement is made. And I suspect that's added a little bit of delay in the announcements, but I think once they start coming, they'll come thick and fast. So just hold on to the that expectation of an announcement at some point, hopefully very soon, so these will start being made.
All right. Sounds good. Rob, that's actually all we have for you this week. Right. We do have some other questions that we'll just hold off and knock those out next week, but we appreciate you coming on here week in and week out and addressing all the questions we get from the community. And of course, we appreciate the community dropping those questions. So if you do have anything on the Hedera ecosystem or the HBAR economy, go ahead and drop those down in the comments below. Rob, again, thanks, and we'll see you next week.
My absolute pleasure. Thanks, Brandon.
Again, we want to thank Rob for coming on here every single week and giving up his time. We know he's a very busy man, but he certainly knows how to grind. So I want to move on to a few more things that we have going on in the space. The first thing is I saw another post by Genfinity. They are doing a fantastic job, but this one caught my eye. It discussed how Deutsche Bank is highlighting that boomers are going to transfer $84 trillion to more crypto-engaged Gen X and millennials over the next 20 years. And this paper also mentioned that we're going to see mass tokenization adoption over the next few years, both of which are tremendously bullish for Hedera and the HBAR. Next up, I want to congratulate one of our interviewees from last week. Legends of the Past had over 10,000 signups for early access to their game that we discussed last week. So kudos to Baz and his team. We also saw that Origin, who we covered recently, is going to have their free mint on Kabila on April 28th. And of course, with that price, there's no reason not to participate. Greg Bell, head of financial markets at the HBAR Foundation, is also reaching out to the next generation by speaking at the Harvard Business School. I also want to remind everybody that Karate Combat 54 is taking place next Friday. That's going to be in Dubai alongside Token 2049. It's going to be an amazing card. It's going to be really entertaining to watch these fights. But I also want to remind everybody, because if you have any of your karate tokens on centralized exchanges or you're providing liquidity on someplace like Saucer Swap, you have to move those off if you want to participate in up-only gaming. So make sure before next Wednesday, you shift those over to your app. So the next thing I want to touch on is, again, something that's happening over at Token 2049, and that's in our deep hint space. Neuron, which of course is built on Hedera, is going to be speaking on a podcast called Deep Hint Day, and that's going to be held in Dubai. So I'm assuming, since it's around the same date, that it does have to do with Token 2049. Neuron also put out a little promo clip, so I wanted to share that as well.
Neuron, providing developers with universal access to AI and DeepIn resources. Build or integrate your AI or DeepIn resource network quickly and easily using the Neuron SDK. Once integrated, your resources and data is visible and searchable in the Neuron Explorer, making them universally accessible to developers. Developers, or even AI agents, can integrate resources directly into their applications with just a few lines of code, whilst ensuring the highest levels of software performance, availability, and customization. Our first use case, 4D Sky, connects community flight tracking sensors to drone and airport software. 14 customer software applications are already integrated, including OpenFID, our flight information display, which is being installed in 3 UK airports. Get building now. Visit neuron.world.
I think we've had at least 4 interviews with James. He's the CEO at Neuron. They're doing a fantastic job representing Hedera in the DeepIn space. So if you are curious about anything they're doing, you can go and take a look at some of those interviews we've done in the past. With that, let's jump into some network analysis. Today, we're going to start off using HGraph Stats, which just launched, I believe, today. Brandon D put out a video on X if you want some more information on the platform. It's showing daily revenue of $1,500, time to consensus finality at just 2.5 seconds. The volume is still pretty low at below 10 TPS, and something that we haven't looked at much in the past, hourly active accounts. Over the past hour, there's been well over 500, and it seems like there's a daily ebb and flow from the low to mid 100s. I love that we're getting another tool to check out the metrics on Hedera. I'm going to have to dig some more into this before I really understand everything that they have going on, but I'm looking forward to it regardless. And with that, let's go ahead and jump into the crypto and HBAR markets. Risk assets saw a nice rally this week as trade tensions eased with reports that Trump is considering significant reductions to his tariffs. Trump also said he had no plans to remove the Federal Reserve Chair Jerome Powell, easing concerns about potential monetary policy disruption. The pump in stocks was good, but as is often the case, crypto's move was even more significant. Bitcoin is up 2% on the day and over 12% on the week to over $95,000. HBAR is up 6% on the day and 20% on the week to 19.9 cents, which has allowed us to move up the CoinMarketCap list to number 15. The chart looks very constructive, and 20 cents looks like it's going to be a bit of a battleground. Hopefully we can push through it and flip that to support. If we do, I think a run up to the upper 20s is in the cards, with the key area being between 26 and 28 cents. So looking forward to the week to come, we're going to get Brady back from Bonzo Finance to do another DeFi corner. Considering how things are heating up in the crypto space, that's going to have an impact on our DeFi metrics, so he's going to have a lot to say about that. We're also going to get Equity Lab on to finally check that interview off of our list. That's going to be an exciting one. I'm also going to have Viana on. We haven't heard them before. They're a new enterprise that's building on Hedera, so I'm going to have that interview as well. And then I'm going to be jumping on the all hands call from Genfinity to talk about what's been going on in our DeFi ecosystem the past several weeks. Besides that, of course, we're going to have Rob back for Shark Bite. So if you have any questions about the HBAR economy or the Hedera ecosystem, go ahead and drop those in the comments. Don't forget to move your karate from wherever you're keeping it, whether that's another wallet, whether that's a centralized exchange. If you're providing liquidity, send that to your Karate Combat app so you can participate in Karate Combat 54. That's all we have. We'll see you next week.